Welcome everybody to Tom Williams' Friday session. Tom.
Right, thank you for that, Peter. Thank you, Rita. Yes, Tom Williams here, talking to you from Worthing, a little resort town of the south coast of England. You probably all know by now. Now, what's been happening here? Well, this is the S&P 500. This is a 20-minute chart. Right, now there's no reason why I put this up. It's just I could talk about any of these time frames. But the thing is, what we're looking at is 20 minutes here. Now, markets don't like ultra high volume and up bars. And we've got very high volume on these up bars. Now, this is probably the opening. Was that the opening, Peter? I suppose it was.
Yeah, the market's open there, yeah.
So that will account for a lot of that. But it looks all suspiciously like any absorption volume from the top here, doesn't it? If you look back on a few newsletters, I described the principle of moving up through supply to the left, and what the psychological reason why the so-called smart money do this. They market up like this through these areas fast as possible. If it was bullish, you'd expect a test fairly early. There is a bit of a test there, look. It's fallen, and there's no selling pressure. And that's why it's gone sideways, look. They appear to be holding this market up for the Christmas rally. It would look like they're definitely determined to keep that market up there on the high points. And they do appear to be slowly distributing. In other words, if you study these individual bars, you see that the blue bars, which are up bars, have very often got more volume than you'd like to see. And the down bars are low volume because they're holding the market up. That makes sense. They're selling. Every time there's a wave up, they're liable to sell into it. And if you look at these individual bars, you see some of that. Like this one here, look. That's a blue up bar, look. What's the volume on that, Peter?
It's low. Relatively low. It's pink.
It is, oh, it is low. That's no demand, look. And that's why it's come off, look. All the time you get these blue up bars on low volume, it means there's no demand from the professional side of the market. And that's why it's drifting off, look. It's the level black bar or level bars. There's not a lot of selling pressure. And this bar's down. I would have thought if this market was bullish or wanted to go up, it would have gone tested fairly earlier. This is leaving a bit late, isn't it? It is Friday. They will do their best and utmost to mislead you. If you ever form a gut feeling about which way this market's going, which if you're a human being you will do, you can almost guarantee it's wrong, going to be wrong. And why is that? Well, it's a study that we'll have to look at one day. It's obviously something to do with swarm behavior, crowd behavior. I mean, you individually might think individually, that you're out there on your own. But you're not. You're churned in with hundreds of thousands of other thinkers that are probably thinking a very, very similar way to you. And the market, for the market to work, you have to have this 95% losers in the market to make it work, so the professional money can move in and bulldoze their way in with huge contracts. So it's a tricky business, but it's a very interesting business. It's a very exciting business, interesting. You have to have rules that you stick in your mind. You only trade when you see a clear setup. And we're getting more and more into explaining setups and showing you them. So stick with it. And if you don't trade unless you see a setup. Now please, I'd love you to ask questions.
There are some questions.
Rita says there are some.
Park is asking, how can there be a Christmas rally if smart money are now distributing?
Well, that's part of the skullduggery that goes on in the market. You'd be very naive to think that the market was a straight poker game. You would be very naive. When there's money involved like this, all sorts of things happen in the background, and they distribute, but they also hold the market up. They hold the market up. You know, there's all sorts of funny things go on. I mean, I knew somebody sold a silver-plated tea set, which was worth a lot of money at auction. And they were pretty certain that there was a clique of dealers there, that they're the only ones that bid for it. And at the end of the auction, they had it, and they redid an auction between themselves. So you don't know what's going on half the time, where there's money involved. Now at the moment, look, you've got a typical mushroom top shape, which is not a healthy sign. That mushroom top is usually a sign of weakness.
Okay, Winston saying, if weakness is in an up bar, must we have weakness in the background for the market to go down?
Well, we've been talking about this. When we talk about weakness, we're really talking about weakness that's going to help you do a bit of scalping. But we haven't seen the real serious weakness. The real serious weakness will be a buying climax or the end of a rising market, which I've described in newsletters the last week or so. But in the meantime, you've got these bars that appear weak, and that's why it's drifting off like this. I mean, you've got high volume here, right? You've got that red bar sticking up in the air like that. That doesn't look very healthy. You've got this blue bar here, which is no demand. So don't forget, you're reading this. It's like reading a Braille chart. It's telling a story. Whenever you see a blue bar, no demand, that's low volume like that, it means the professional side not interested at the moment. Why aren't they interested? Do they know this is weak here? It's fallen off a lot. So we just have to watch that. But we don't trade unless you see a setup.
This is the hourly chart of the ES. Michael, I'm not sure about your question, but Michael's saying same signal on the hour chart, absorption volume if the bar low is below the previous low. Do you see any absorption volume there?
Say that again.
Is it absorption volume if the bar low is below the previous low? Is that yeah, we've no?
No, that's nothing to do with absorption volume. In other words, if the bar has a bottom tail, yes, it may be more strength than weakness because they've gunned it down there to catch stops, shake people out. But it's not part of the what we're talking about here. I think it was 2 or 3 newsletters ago I put a tail end to a newsletter talking about this. Well worth reading. If you study and know these principles, then you won't go far wrong. But this is an hour chart. There's a very high volume here, look. If this bar keeps very low, there's nothing obvious at the moment. The reason I hesitate about saying it's bullish is, well, that's fair enough. It's high volume there. But if it was bullish, I don't think you get a down bar that wide. It would be more like a test, more like that bar there, look.
That would be a failed test, you could argue.
Well, there.
Yeah, the red one.
Well, it's not really a good test. See, a test, a proper test, does not have a high higher than the close of the previous bar. I'm sure I mentioned that many, many times.
This one here.
Yeah. The high should not be higher than the close of that previous bar. And then that would be a good test. But this doesn't look strong at all, does it?
Okay, DT is asking for gold. Well, actually, we've only got it on our end of day. He's talking about the 1 hour chart. He says it's in a clear downtrend channel on the 1 hour chart. There is a buying climax, end of a rising market, and a reversal after effort to rise today. So we can't do the hour. Well, do you want to just talk about gold on the daily? Yeah, Tom doesn't get the data. That's basically clear. On the hourly chart, it's in a clear downtrend channel. There is a buying climax, end of a rising market, and a reversal after effort to rise today. No, it doesn't to me.
Because if you had a full...
Yeah, let's have a, yeah, that's what I thought. Those are all...
I'm sorry, it doesn't make sense that. The reason is I need really to see the chart. I find it difficult to go on other people's description of the chart. Because to be quite honest, when I look at the chart, I see a lot more than most people. And you say you've got a buying climax. Right, okay, well that high volume and down bar, red down bar, is that right? There's nothing to do with the end of a rising market or whatever you said. But I'm sorry, I just don't have the hour. But this is a daily chart. And there is a little bit of stopping volume there, look, on this daily chart. And that looks like a little bit of a shakeout. So this could possibly be grooming itself for a small up move because of that. It's going sideways. But certainly not what I would call a full-blown selling climax. It's just some group had stepped in and bought that, anticipating a rally of some sort.
this is the ES daily for Peter. Now this is the ES, the daily chart. That is the bigger, the S&P future daily. There's the bigger picture.
What chart is it?
The S&P future daily. So we had some trend. I don't know when we drew them, but there's our trend channels. And Peter's saying, can we have a look at this chart, especially the low volume on the last bars? Can that be a sign for a turnover? Yeah, we've been watching the Dow, Peter and I, and it's the same. It's been creeping and creeping up on these tiny bars. That's 20. We can go to
10.
yes, hopefully. Oh no, that's all it will do.
Okay. All right. So this is the future.
Yes. He's talking about this. It really has really crept slowly.
Well, it is because they're holding the market up, determined to get a rally here. Now, where's the low volume?
Well, they're all little bars with low volume.
Wow, that's reflecting no demand. But they're still holding this market up by the look of it. And if this goes on long enough like this, you will have a hell of a bear move out of it, eventually.
There's the question, is that low volume because of the short holiday week?
Well, my experience is don't try to read too much into this, because you'll never know the truth. They'll never tell you the truth. It's just how they operate. Even if you had the word of some of these traders on the floor, they couldn't be bothered to tell you really, even if they knew themselves, which I'm not sure if most of them do. So don't add up your own conclusions. Just accept the fact is that low volume means no demand. So we assume that on that bar there, look, there was little or no selling pressure on that bar. And these bars here, look, they're up bars. There's not a lot of demand on them, is there, look? That's why it's more or less gone sideways like this.
Do you think it signifies a turnover, though, Tom?
No.
No. That was a question.
No, it doesn't signify a turnover. What it signifies is that the professionals are holding the market up, squeezing the last drop of blood out of it if they can. It takes more than that to create a serious bear market. You need to use a buying climax or the end of a rising market, which I fully described in the last newsletter or so.
So if you've got any charts that you want Tom to look at, then please put them into the question box and we'll have a look. And yeah, when that question about putting our own ideas to it, Peter and I have often done that over the years, said, oh well, it was a holiday, and that probably explains that, and not trusted the chart. And funny enough, looking back in hindsight, we should have, because it responded to the volume that was there. So often we're our own worst enemies, that we put our human judgments into it, and it really is, I think, a matter of just reading the chart and believing what you see in front of you. Okay, Peter, pound weekly chart for Carlos.
Pound weekly.
Yeah. It's the B. It's B. Yeah. So this is Tom. This will be the weekly chart of the British pound. For Carlos, would like your analysis.
It's a weekly chart of the British pound.
Yes.
Well, you can see it's in an uptrend, trying to go up. And you can see there was a this is a shakeout, 2-bar shakeout. Look, what does it say?
No supply.
Yeah, so they marked it down. There's no supply. On that, they marked it up. Now this is interesting. Look, when I've told you many times, whenever you see a red arrow like this, an up move, right? No what?
No demand.
Right. If the very next bar is tested, it's bullish, and there it is. There's the very next bar, look, to that red arrow. So it means professional money sort of seen that weakness that our computers picked up, right? They don't like it, so they have to test the market if they want to continue marking it up. A test is a down bar, right? Note that the high is not a great deal higher than the close of the previous bar. Closed well up in the middle, and the volume is relatively low. The next bar, they mark it up quickly. That's also confirmation is bullish. Professional mark it up like that deliberately. There's another red arrow. And lo and behold, this time it took two days to test the market. Look, and there it is. Look, there's a test. I mean, I would advise you, if you're going to trade these currencies like this, you specialize. Right? And if you ever see a red arrow like this, and it's a test with 1 or 2 bars, that's bullish, means it wants to go up. You get a narrow spread down, close in the middle, volume is low. Now there's another red arrow there, there's probably no demand, but shooting up, look. That to me looks as if it's trying to go up, doesn't it? As in a bullish run at the moment. Of course, the knack is to get on these lower.
Winston has been reading about creeks, Tom. Wyckoff speaks of the creek as the area from high, the close of the climactic action bar. How do we establish the creek when the close is at or near the high?
I'm sorry. But that could have been asked question in Chinese as far as I'm concerned. First of all, I never talk about crossing the creek. This was SMI, a term that showed you describing that how a human being, if he wanted to cross a creek, would back off and then run for a jump. But when I was developing this software, I really like to call a spade, and I never use the terminology crossing a creek, because it can be a bit mislead people, much as possible. To describe what's going on, I have to see the chart in front of me. I'm one of these people that like to see the chart. I find it difficult to visualize a description from other people because the description is usually not accurate. Funny, I saw this TV program and they were, the police were describing how when they questioned people and asked to describe the assailant, what they saw, most of them were different, entirely different. That's the sort of thing I mean. Certainly not close to the real thing. Human beings are a bit notorious in that way. What have we got, Rita, now here?
Right, this is the daily of the pound.
Yes.
Shall I put 20 bars?
Yeah, daily. And does this cover the question?
Well, no, somebody else is asking for this chart.
Right.
I mean, do you see anything in there about crossing creeks here? What is it? There's nothing here. We don't, anyway. Okay.
Not really, no.
This is the pound. For the daily chart, for Louis.
Yeah, Louis.
That's bullish as well.
What?
So that's the pound. That's the daily. We had the weekly before.
Yeah, this looks bullish.
Tom, it's gone through this level here, hasn't it?
Yes, that's not crossing creek.
No, but is that a sign that it's going to possibly go on?
Well, you see, when you reach an old high or an old low, it will automatically become a resistance level. And you'll find there are certain sequences appear, say, to push up through an old top. Pushing up through supply to the left, just one of them. Gapping up, end of rising market is another one. Because they have to overcome the resistance from the old high. Because packed into those old highs will be thousands of traders that were not too happy when the market turned against them. And what they want to do is get out with no loss. So they think, right, when it reaches my level, I'm out. Now, professional money know how the herd, how you think. That's part of their trading. What's that, Rita?
We're going to try and do a trend channel here, Tom.
Okay. Now, in a bullish move, you pick the first two lows and the first high.
So, when will it start? Miles back or recently?
Oh, yeah, here. The first high. Yeah. Trend lines work. They're very good.
Isn't it that one, Tom? There's one down here lower.
Oh, that won't do.
Okay.
No, sorry. Then you have to do that one and that one, look.
Yeah. But look, it's not.
Yeah, it's not a very good trend line. I think it needs to be a wider field, a long area.
Trend there, and then there's a trend here. So I would say something like,
Yeah, try that, look. The first high should be here and there. Yeah. That gives you a good idea, look.
So it's got room for maneuver, hasn't it?
Oh yeah, there's room for some more up moves, look. I would say that pound is bullish. And you never make a serious trade in the middle of a trading range. That was a rule we used to follow, one of them. I could easily go up.
We put SFM, Peter, up. SFM Daily. It's called Sprouts Farmers Market.
SFM.
Yeah. Should we just put it on? Did you get off the thing? You're still on it? We're putting up SFM Daily for Pete. This is Sprouts Farmers Market, apparently. Oh. Right. Tom, Sprouts Farmers Market. I don't think it's Brussels sprouts in the festive term.
Farmers Market. The only farmers market.
Farmers Market.
Yeah, the only farmers market I knew was in LA. Very nice one. Well, they have all these various Chinese, all sorts of different cooking, and all this fruit and everything. Very interesting. All covered over, very nice. Right, so who wants to look at this? Peter. Well, I can immediately see. Markets don't like high volume and up bars. Yeah. That is a blue up bar, look. Bang. That's not healthy. You do not see ultra high volume on that bar. If that was a down bar, if that volume was on the previous bar, fine. That's a warning there. They put a warning across your bows there. But that's not good. That definitely looks like it's distribution all across here. Look, there's your up thrust. But markets don't like ultra high volume and up bars. Now, if that was on a down bar, fair enough. It's not. It's an up bar. It's on a blue up bar, so that's going to knock that on the head. Any bullish move in that.
Okay, this is the yen daily for Michael. He'd be interested in your view of this and the weekly, but we'll start with the... Well, should we start with the weekly?
Weekly of what?
The yen.
Oh, the yen.
This is the weekly. Oh, look, it's... gives you an idea.
It's trending down, but look at this.
It had some very high volume there.
Where?
There, can you see that?
Yes.
On up bars,
Yeah,
and it's sort of
weak.
knocked, and then, okay, here you go. That's the weekly.
Yeah. Immediately that smells of weakness. First, it's obviously a downtrend. You've got ultra high volume and up bars here, look, which definitely spells weakness. Can't get my mouse to move the cursor. Just won't move. But press the right key. Anyway, you've got ultra high volume and up bar. As soon as you see that, look, right, you know that's not going to be any good to you for long position. That's better. Where's the tab? Okay, anyway, that's the first thing you look at straight away. So as soon as you see that, you turn the page. You're not going to beat your head against the wall trying to analyze that. And that's why it's constantly falling off like this. Now don't forget, the currencies have probably nothing to do, or very, very little to do with the news. And we've all heard Japan do it pretty well. Exports and all the rest of it are good. That's all part of the misleading information that you're bombarded with day and night. That's why it's not really important for you to rush and listen to the news. Believe your charts. Markets don't like ultra high volume and up bars. And there's a beautiful example there. And it goes on and on, lasts for some time. Look. What it does like is ultra high volume and down bars. If they're red down bars, that means that some professional group has stepped into the market and bought. They bulldoze their way into the supply and demand chain because they figure they can move it up. That's what you're looking for. But when you see on these up bars, it's not, is it? So it's not buying.
Some questions have come back, on the sprouts again. Hang on, we'll get there. SFM. That chart we were looking at just now, Tom, the sprouts, yeah. SFM, and you were talking about this bar here. So, Chris is asking, does it mean anything that this blue down bar, well, it's actually an up bar, that this blue bar went below the low of the previous bar and closed on the high? That's one question. And there's another question from somebody else, which I'll read as well, from Pete. Would your analysis on this be any different knowing that the majority of that daily volume came in on an hourly down bar and then moved up?
All I can do is read the chart that I'm looking at. And that's blue bars is blue because it's an up bar. And the volume was far, far too high. That's all I can say to you. Markets don't like ultra high volume and up bars. Definitely not. That's not the action of a strong stock. If it was a red down bar, that'd be different. Means supply is there. But if, the story will have to unfold. We can read it as it goes along. It's certainly not ready for a conclusion at the moment. Definitely not.
Yes, so Tom, tell me if I'm wrong. I'm sitting here thinking you are literally reading the chart, saying what you see, basically, and I'm thinking to myself, well, yeah, if on an hourly chart, if that was the case, that there was very, very high volume and it went up, that would be great if you were trading hourly on an hourly chart. You might see volume coming in and you see an opportunity to do some scalping. What you're saying is what happened, it could, on that hourly chart, have been a lot of buying that did create that, but it's still, they're marking it up to sell. Is that what you're saying, Tom? Which creates the weakness in the daily chart.
What I'm saying is markets don't like ultra high volume up bars, blue up bars.
Markets don't like ultra high volume on blue up bars.
And that's the analysis.
And that is the analysis. Yeah.
So no matter how much you want to try to tear it to pieces and assume this, assume that.
Yeah. So Tom's saying just read the chart as what you see, that markets don't like ultra high volume on up bars. So it'll be interesting to see what happens. We're following this chart on a daily basis to see what happens. Okay. Carlos asks you, Tom, when you were working at the private fund, did they use point and figure charts to calculate how far a move can go after accumulation?
Yes, they certainly did. And I made all the point and figure charts up. And of course it was very easy because we had girls there taking the readings off a ticker tape that was running live in the office. And then we just mark it up and mark it down, whatever it was. And what's good about a point figure, it gives you an idea where it's likely to go. If you take the count properly and correctly, right, you'll be very surprised how accurate that can be. It's like the foundation's been built for a building. If you're an architect, you want to know how high this building's going to be. They dug this hole and they're working on it from your experience. Exactly roughly how many stories it's going to have. But we don't have point figure, unfortunately. But it's not essential. The essential thing is you can read these bars as you're moving on. It's a book. Remember, it's reading a story, a book. It's like Braille to you, and the Braille's written in the high, low, close, and volume. And there's only a few things you've got to keep in mind. And don't try to be too clever and try to rip the analysis apart, because you'll never know the truth anyway. You know, like, are they going to lunch? Are they this? Are they? And all the rest of it.
This is Apple for Park. Park says it appears to be at the top of a trend line on the daily and weekly. So is it possible we'll have a down move? Yeah. Yeah. Yes. Well, it's not at the top of our trend channel, but depends where Park's got his.
Well, maybe the smaller time frame there's a trend.
Well, as you can see, Peter's drawn trend lines, first two lows, first high. And there's certainly some scope here, still scope here for an up move. Be careful, because whatever your natural gut feeling tells you is going to be wrong. Now, why that is, we need somebody very clever at human behavior, psychology, or whatever it takes to tell us why that precisely is the case. But that Apple is trending up. It's been very strong for a long time. And you can see by the trend line we've just drawn, there is scope there.
Edmund's saying it's looking bullish because it's gone past this up frosty bar now. It's broken through.
Yes, yes. Yeah. Lots of green arrows. Yeah, I can't see that very well.
There's that up thrust that I
Yes, yes.
broken up through.
Yes, certainly trying to push up through there.
Yeah.
Now, if Apple, you suddenly see, if it's bullish, it'll probably test in the next few bars, a testing rising market. If it tests, in other words, if it's a red down bar, narrow spread, volume is less than the previous two, then that could go up easily, up to the top trend line. In a bullish market, you use the first two lows and the first high. If you've got different trend lines, perhaps you're not doing that. Okay.
Winston is saying the market does not like ultra-high volume on up bars. However, they do appear frequently. What should we do when these bars appear?
Well, it all depends what your trading position is. I mean, if you're scalping and you're long, right, then you might say, well, I'm going to close this position out. So as your skill as a trader kicks in. What we're here to tell you how to try to read the charts. We can't tell you actually how to trade it. It'd be a nightmare for us with thousands of people telling them what to trade. Okay.
Yes, Winston. So study the books that we mentioned last week during the webinar. They talk about ultra high volume on up bars, and I remember us talking about you were talking about bullish bars and bearish bars, and when you say what should we do on these ultra high volume, well, first of all, it's often, not always, but it's often the first sign of weakness. If you've had an up move in a chart, it's an uptrend, and then you suddenly get a very ultra high volume up bar, it could signify the start of a down move. It's the first sign of weakness. We just need to have some sort of setups going on here. It's the first sign of weakness, and then what I would do was I would be watching to see some kind of confirmation of that weakness. So you may sometimes get an upthrust following a very high volume up bar, where they push the price right up, and the bar comes to it tricks people into thinking that the price is going to go up, and lots of people start buying. Of course, that's the whole idea: get them all buying, and then we're going to ram the price down. It closes on the low, so that's an upthrust. These are all in the books that we mentioned. If we had prepared a little bit better, then we might have seen some. But of course, we're in a bullish market, so yeah. So and then you might get something like a low volume up bar when Tom often talks about a no demand. So for myself, I'd be looking for some confirmation of that very high volume in order to go short. So that's one of the things that you can do. Okay. On that business about point and figure charts, Tom, do they work only with stocks? Can they apply to Forex?
Point and figure will work on any chart, regardless of what it is, as long as you've got the high-low close. You don't need the volume with a point and figure. it's quite a bit more extra work. It's nice if you've got a computer that can do it all for you. But the trouble with this stock market business is the programmers usually, no matter how intelligent they are, they've got no idea. So don't you feel alarmed if you can't see all this straight away. Because to be a programmer, you've got to be highly intelligent sort of guy or lady. And very few, I met two in my life that more or less know what you're talking about. So don't get disheartened. So some very, very clever people out there can't see it. But point figure are very good if you can get them going.
All right, well, we're running out of time, and well, I think we'll just have one more question. There is a question. Peter, where's the webinars in the VSA Club last week's webinar? Is it not uploaded yet, Peter? He thought it was. Well, no, we've got a couple. We've got somebody saying it's not. So, yeah, we'll endeavour to have this week's and last week's, if it's not there, done tonight. And Jerry is asking, this is our last question because we've run out of time. Tom, when you say don't try to be too clever, are you saying that we need to stop trying to predict where the price is going to go, but rather simply focus on how the price unfolds at specific levels on the chart?
Now, what I'm saying is that with no question about it, we can prove to you, you can prove to yourself, that the market moves on supply and demand. Now, we've all heard of supply and demand, you know. It's in every aspect of our life, supply and demand. Everything you do, right? There's nothing really that's not controlled by supply and demand in your life. But what I'm saying is with the stock market, you get this, what I call the bully boys. They move in with their thousands of contracts and deliberately alter the balance of supply and demand, right? Plus they're skilled as traders. And so you want to keep an eye on that. Keep the reason why you look at the chart. Okay? Does that make sense?
Okay, well, that's it for this week. Now, I don't think there will be a webinar next week because Tom has an appointment. So we'll see you in 2 weeks' time. And we're aiming to do the newsletter this weekend, possibly on Sunday. So thanks for coming, and have a great week. Bye-bye.
Welcome to GoToWebinar, Web Events Made Easy.